Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, and we are bringing you 1 hour of the Hardcore Mortgage Show. I'm your host, Harvey Freed. We've got a great panel. John Kolb joins us. Good morning, John.
Hey, guys. Great to be here.
All right. Becky Alley from the office. Hey, Becky.
Hey, what's up? Good morning, everyone. Thank you for joining us on this beautiful Saturday.
You guys look all dressed up, too. And, of course, Lisa Lawson. She's out there, I believe. Joining us there. You are. Hey, Lisa.
Yep, I'm here.
You guys look so great on the Zoom broadcast. You bring on John, special guest Jessica Zielke. Jessica, you've been on a million times.
Good morning, everybody. Thank you for having me.
All right, Kate, can we hear you guys on the broadcast? Make sure I definitely can hear you there on the headphones. Part.
I think Jessica's got her mute button on or something. But
all right,
yeah,
we'll get that up. Jess, hit something there.
Better?
There you go.
Yay.
All right. There she is. Hey, she's with Stewart Team Real Estate Partners in downtown Rochester. And again, you guys have been constantly on the show, giving some great advice, and everything you guys have said about the market. You know, if we go back to the original 3-4 years ago when you guys first started coming on, it's all true. Everything you guys have said has been true about the real estate market, and it still continues on. Is this buying frenzy just going to continue for another year, Jess? What are you thinking?
You know, it's a difficult question to ask, and I hate to be in the hot seat to answer that question.
You're in the hot seat.
I know. You know, I absolutely believe that that's going to be the case. I still have just as many buyers who want to buy, who are qualified to buy, but there's not enough inventory on the market. So yeah, unfortunately for my buyers, I do think that this market's going to continue in this fashion for quite some time.
John, even second homes, even across the entire state, across the entire country, it's the inventory issue. It's been that way. And that's what's keeping these prices continuously going up. It's super strong. There's just so many buyers out there, John.
Yeah, it's really unique with, people just dropping letters in your mailbox and or putting little Post-it sticky notes on your door saying, call me if you're interested in selling, not even an inclination of wanting to sell a place in northern Michigan, and people are just out there, beating the pavement basically. So it's a different time. It's we always say the same thing over and over again. It's very repetitive, but we got to get people out there that are truly interested in selling to get their houses on the market so that we can have some more movement and get the system flowing, and just do those reverse contingencies that the Stewart team has always talked about. And I am starting to see more and more. So I think our message is being beaten into the general public out there, and I want to just commend everybody on this show that I think we were one of the first people to really talk about that over and over and over again because of the expertise and knowledge that we have.
Becky, go right to you on that reverse contingency. There's no doubt. We see it so often in our purchase agreement. Jessica's obviously been writing those up. It gives the buyer on the next house that confidence, or the seller in that matter, the confidence that, hey, I've got my house sold. Now I really can aggressively go after that other house. And the reason why you have to have that confidence because you're already overpaying 10 or 20,000 in appraisal guarantees and everything else.
Yeah, I mean, we want to make sure that we're setting up our clients for success, and the Stewart team, that's why they're a repeat guest of ours. They are a testament of that. They are constantly opening up the doors and even educating us on some different things that's going on the real estate side, because we have to be evolving on the mortgage side, but to have, alliances with really good real estate agents that we can kind of just put that out there to for this to be a true advocate show for our listeners. I mean, that is key, so when you're in these competitive markets, I mean, you're seeing a lot of 60-day occupancy, right? Because you got to make sure that if someone we want someone to enter into the buyer's pool. Okay, well, now they sold their house. Now what? Now they're in there with all these people looking for that same one house, right? So it's all about setting up everyone for success and making sure that if you are looking to purchase, that you're going to have a home to get into. And sometimes that 60-day occupancy, which is now, that's the thing, right? You're seeing more occupancy than you are seeing overbidding on the purchase agreements that I at least am seeing right now.
As busy as we are, Jessica, would you agree that August felt like there was 6% less sales out there? The numbers in August just said 6% less. Did it feel that way to you too?
Yeah, absolutely. From our company as a whole, we didn't have many sellers who wanted to go on the market. It seemed to us that everyone was traveling. Everyone was trying to get out of here because they could for the first time, and then also trying to time it with school. So everyone was out of town, everyone was getting out of town. Yeah, I can tell you that I projected that wrong a little bit with my clients, that I expected to see that traditional summer increase of inventory, and it did stay. But where my buyers were able to win out is the ones, again, that were pre-approved, that were ready, that knew what this market was look like, that we prepared them to see what this market looked like. I got all of them under contract in that quieter time. It was huge. And that's what I'm telling all of my clients that have been pre-approved since January. Let's go. Things are not going in 2 hours. Things are going in 2 days, which still is ridiculously quick for real estate. But considering where they were and they had already been prepared, most of my clients, yeah, you guys are right. It's a lot of occupancy, but the last 4 or 5 contracts that I wrote, we didn't go over asking, and their offer got accepted.
Yeah.
There you go. There was 13 straight months of double-digit price increases. That's huge. But it was the first month, August was the first month where there was a decline in the sales numbers. And again, it could have been, like you said, Jess, I felt it too, like a lot of people were out of town. It was a great opportunity. It seemed like just with the way the pandemic and then school was setting in. So again, a lot of sellers and buyers were both on the sideline sitting it out as home prices were continuously going up. Lisa Lawson, no doubt about that. Home prices continuously going up, double digits everywhere. Parts of the country are even 20% from year to year. Could you imagine, Lisa? You buy a house last year, and we're seeing that some of the zip codes here in Metro Detroit, we're seeing the same thing.
Yeah, I mean, people are sitting on a lot of equity, and there's, this is actually a really great time to upgrade. If you're looking to move, you could have bought a home 3 or 4 years ago. It might have been your starter home, thought you had to be in it 5, 6, 7 years, and you might not have to be in that starter home that long because there's so much equity. So this is the time to have that conversation with your agents, have that conversation with Jessica, say, hey, look, this is what's going on. I know what my original plan was 5 years. I really think we're ready to move. I think we're starting to outgrow this. Let's upgrade. And you can roll that equity into your new property as down payment. And this is the time to evaluate those things.
Jessica,
hold on. I want to establish what she's saying, because an example, I bought my starter home in 2006. That was supposed to be that 5-year home, and it turned into the 12-year home, right? Because of what happened, the timing of it all, right? So if what Lisa is saying is true, I mean, we have been in a market where it has been appreciating for several years, right? So you can actually truly be in that 5-year starter home and get yourself in a position that maybe you were a little bit nervous to kind of, maybe you fell a little bit short. Maybe you're nervous to have that bigger payment. Now you've established yourself, you can handle it. Talk to your realtors, reach out to this Kevin Stewart team, because it really can truly be that 4 to 5-year home, not the 12-year starter home like I had to experience.
Alrighty, we have got a great show lined up for you here all morning, and that's going to be a ton of sports. We got the pregame for Michigan Wolverine football coming up at 10 o'clock. Keep it here to the Hardcore Mortgage Show. We'll take all your calls, 248-539-9797. We'll be right back.
Hi, Harry Glantz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
We are back. Hardcore Mortgage Show brought to you by Capital Mortgage Funding in our 22nd plus season, 23rd season coming up here in January. We take your calls live. It's Mortgages and Real Estate, 248-539-9797. Jessica Zielke joins our Capital Mortgage team, Stewart Team Real Estate Partners. Of course, you're out in Rochester. You guys drive everywhere. A 5-county real estate office. If you're looking to buy or sell a house, call the Stewart Team Real Estate Partners in Rochester. They'll hook you up. That's where you can find Jessica all week long and all day long. We won't ask where Kevin is. We know that he's allowed. Maybe he might be working. I don't know, but we're not gonna go there with Kevin. But hey, home purchase business has been fantastic. Obviously, Harry says it's been going on for 10 years now. Really, since the trial and tribulations of the past, 2007 to 2000 and maybe 10 or 11, people are walking away for their homes. Are you kidding me? For those folks who hung on to their homes, I don't know. Some of them just went about their lives. They were able to hang on, and now they've got a ton of equity. And boy, now we see so many families. And John, you'll tell us, John, there's so much equity in homes now that families have been able to consolidate debts, add those first and second mortgages together. John Kolb, boy, consolidating debt, maybe dropping the term. That's the way to go.
Yeah, I mean, it's been a joy to kind of see how we can really help people and help them save on a monthly basis. I mean, just last month, I had 2 different instances where we were saving people $700 to $800 per month in their monthly debt when we consolidate everything. And everyone gets all freaked out when you say, okay, I'm going to take this cash out and pay off credit card debt, and think that they're going backwards in life. But if you think about it and you set up a plan on how you can get yourself back down. I mean, we talked about these people saving $700-800 a month, and then running an amortization schedule where they were applying $500 a month extra to the principal in each and every month. And I think it was like 3 or 4 years that they were going to be back to where they were. Where if they had just paid $500 more per month towards credit cards, they would have never had them paid off. So it's just like doing your homework and making sure you're talking it through with somebody, and figuring out a plan to get yourself back on. We all go off the rails sometimes, and we got to just make sure that you have somebody there that cares, just like your mom cares, to get you back on your path so that you can succeed. And that's what we're here for. We've got great advice to give. We've got great information to share, and we've got great partners to partner up with if we can't help you the way that we need to. So call us. If you don't, all I can say is you're missing the boat on some good expertise, and most 9 out of 10 times it's free advice. I feel like that's what I do a lot, but that's okay. We're out here just to give good advice and make sure that we're taking care of people.
Good advice, good experience advice. Becky Alley, these costs to fix up the house, the kitchens, the bathrooms. Jessica's out there working her tail off. And some of the homes that are left on the marketplace maybe aren't as appealing. Maybe they really do need a new kitchen, but the bones are good. And because the bones are good, you can get in there and make it your home. But Beck, those costs on these repairs are up. They went from 20%, maybe up to 33% higher than in previous years.
Yeah, I mean, to even go back on what John was saying, like 2020, I describe it was almost like a big fart for everyone, right? It was just horrible. And most people it was just a bad time for everyone. And unfortunately, people were racking up credit cards to survive because they weren't able to work at full capacity. We were fortunate where we could work virtually, and, the rates were really low. So it was a perfect storm for us to kind of reach out and help as many people as possible. So what John is saying, that, you can't look at it as a negative light when you are using your biggest asset that you have to put you in a better position. And, if you can save, I just actually talked to someone yesterday. She hesitated for almost 6 months, and she finally reached out to me. She was a client of mine. And she was like, you know what? I've been thinking about everything you said, and you're right. And she's saving $880 a month per month. And she is literally helping her kid. Pay for his car and all that other stuff, and applying that towards her principal, because that was a big concern. She didn't want to start over. If she applied even half of what she is saving, she's going to take her mortgage down to a 10-year term and only have one payment within the next 10 years. I mean, that's a beautiful thing. And the same thing goes with these renovations that Harvey was talking about, right? If you're thinking about staying, why not? I bought a house and I totally revamped everything about it. It had great bones. It was cosmetically horrendous looking. Paint, popcorn ceiling as far as the eye can see. Nothing against anyone that has popcorn ceiling, but it's just not for me. It gave me ADD or OCD. I couldn't deal with it, right? So I had to literally redo everything. And, I had the cash to do so, but guess what? I could turn around and I have the equity in my home to where I can now recoup any money that I put out back into my bank account so it can earn interest. I mean, there's different ways of doing it. My way might not be the way that you need to do it, but it's about having the conversation, like John is saying, and Harvey says, and Lisa always, we're advocates. Have the conversation, because we're not going to tell you what to do. We're just going to advise you and we're going to give you our opinion because you're asking for it, but it's ultimately you in the driver's seat. But, we're going to give you several different scenarios, and we're going to find the best vehicle to get you where you're trying to go.
Jessica, let's take the edge off some of the sellers out there so they come out of the woodwork so they can sell their house and feel comfortable about it. The average contract went under in 16 days from the time they listed the house. Last year was 31 days, so that got cut in half. So you can go ahead, Jess, explain how you can accept the offer to sell your house, but the seller contingency, that it's still contingent upon them finding another home. Explain that in a little more detail and how it sort of takes the heat off.
Yes. So we sit down and have the conversation with you that from the time you take a contract, we can actually market it so that every buyer in the marketplace knows, okay, Mr. and Mrs. Buyer, we agree with your terms. We agree with your price. We look forward to selling the house to you, but we need to go out and find a property first. Most everybody has equity in their property. And in a very short amount of time, as we've discussed here today, in 3 years turn, I've seen people who are putting their property on the market 2 years later. They're literally just waiting so that they don't have those capital gains, which is a whole nother story, but they're just waiting, and they have equity and they can turn around and they can do things exactly like what you said, Becky and Lisa. You can pull all this money out of there. So what we can do is we can list your property contingent upon finding a home. We have multiple sellers in that scenario right now. So what it does do is it protects your timeline. So you aren't selling your home without knowing where you're going to go next. So instead of a 30-day contract, it ends up that it's, in most instances, we've been able to build in for our sellers 90 days. 90 days where they can go find a property, or 60 days to actually go find a property. And then once they actually find that house, both of those transactions are going, their purchase, their sale, and they don't have a gap. They don't have a gap where they have to move into temp housing, or, unless someone gives them a huge price tag, sure, they'll get out a little bit quicker. But that occupancy it's very rare to find a home without occupancy these days, but we can protect that seller. We market it so no one is caught off guard. And it's been very, very successful for majority of our clients since COVID, since 2020. With this just extremely low inventory market.
Yeah, that's for sure. Hey, Lisa, how about our families out there that ran into some huge bumps in the road, and that'll happen. Things happen in life. Like I'm sitting at a stoplight yesterday and get rear-ended by a 5-ton truck. But things happen. So what? The car's banged up. I'm fine and dandy. How about people that went through bankruptcy, job loss, illness, things that made them lose their house? They had a rough time. They can still get mortgages. At least I'm bringing back a lot of families I see that had the bankruptcies and foreclosures. I feel like there's a wave. They're coming back into the marketplace. Some have kept their houses in their bankruptcy. Explain how people can get back into the game.
Yeah, absolutely. Bankruptcy, some people have this idea that bankruptcy is like the end all, and it's not. FHA is very lenient. If you didn't have any real estate in the bankruptcy, you can actually be mortgageable in 2 years after discharge. If you included a home, it's 3 years. And times like this, it flies by. So the important thing is to reestablish positive credit history. Unfortunately, sometimes I see people who went through bankruptcy and they get a little nervous and they start paying cash for everything and they don't reestablish credit. It's going to be an issue. You won't be able to get financed because what we want to see is that you've reestablished credit and have used it responsibly. So, these are things that that we can help you with. That's why we're here. So even if you're filing bankruptcy right now, give us a shout, say, look, I want to be able to buy a house in 2 years, 3 years. What do I need to do? And we will help make sure that you're on the right path and doing all the steps that need to be done. So you'll be ready as soon as possible.
Jessica, I got to throw this question out to you. I wrote it down yesterday. I was just thinking about some of I have a friend who decided to join Middleton's real estate class starting last Monday. It's a 7-day class. He doesn't look so good lately, but he's in I think he's in day 7 today or day 6. But he's going to pass the test. So I felt good about him. He's been talking to me about buying and selling real estate. He's going to become a new realtor. Now, should the criteria in order to be a real estate agent that you've at least bought or sold your own home once? I don't care if you just got your license, if you had a license for 20 years. How about the fact that you bought or sold a house on your own? Because I think that opens up so many questions and answers that you can really help people with. In fact, we'll come back and answer that question. There's the music playing. We're up against a quick little break here. When we come back, we'll go to those questions, all of yours at 248-539-9797. We'll be right back.
Hi, Harry Glanz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
9:32. What a nice day outside. September 18th. We got football in the air. Michigan football coming up at noon. Pat Caputo's out there starting right after this at 10 o'clock to get you guys started. Michigan State football also today against Miami at noon. And of course, Arizona State takes on BYU at 7:30 tonight for any of you Arizona State fans like myself. 248-539-9797 on the Hardcore Mortgage Show. We take all your calls. Got Jessica Zielke joining the staff here. John Cole, Becky Yaley, Lisa Lawson, myself, Harvey Freed. We give you the mortgage advice. And then, of course, Jess is filling in on all the real estate side. Future shows coming up, Becky Yaley. We've got all sorts of future shows. Title insurance people coming up, divorce attorneys, appraisers, and always the real estate broker professionals. Because buying a house after a bankruptcy or foreclosure, hey, you can do that. You can make that happen, as Lisa Lawson just told you in the last hour. So we want to hear from you. 248-539-9797. And on the same side, John Cole, we got sometimes families that are going through some rough things like divorce in that situation. And we can sort of navigate and set you up for success on that side of purchasing a house, because there's so much to know on how to do things. And often I get into these conversations and usually Becky, it's usually the conversation says something like, well, I heard that, or my cousin or aunt or uncle told me that I can do it this way or that way. And I'll tell you, there's ways to do things to protect your assets. You definitely got to find out all that information. Jessica, as we always talk about, there's so many different steps in a mortgage or in a purchase transaction. We always talk about, you're getting your offer accepted. Has there been any additional things like getting your offer accepted in today's marketplace as a buyer side? You have to have a little patience, and maybe you do have to accept that one offer that says the sellers now need another month or two to go find another house. Are you seeing that? And what other type of contingencies can you waive or you need to put on there to protect yourself?
Yes. The biggest frustration that I'm having is we're just having huge delays from agent to co-oping agent communication. So in the speed of a real estate market where these homes are selling within a day or two, my clients will submit an offer. We don't hear for 3, 4, sometimes 5 days if their offer is being considered or if their offer is going to be accepted or not. And now my clients are in risk of losing an opportunity on potentially another property. A big conversation that is becoming a really huge topic is buyer letters. In other states, they are banning buyers from submitting a personal letter to the seller. It hasn't yet happened in Michigan, but that is the conversation, that it is in violation of fair housing regulations, discrimination, et cetera, et cetera. So that's been a very interesting conversation. If my clients can humanize who they are to the seller, because they're not going to meet face to face until maybe the closing table, if they can humanize who they are and showcase how much they loved the property in a personal letter, I do want them to provide that little opportunity, especially if it's a seller who is occupying the home. They're loving that house, they're taking care of it, maybe they've made some upgrades, and that's a nice piece that my buyers can supply.
I wholeheartedly agree with that. And, I've told this story a million times. I'll keep telling it. When my parents sold their house in Michigan, my mom envisioned the person buying the home, raising 3 kids for 35 years in that home, loving it, putting the memories on the wall, notching the how tall you were getting on the doorstop. And, when she found out at the closing table that the gentleman was going to buying it was going to turn it into a rental, I thought she was going to get up and walk away. So, I mean, and I agree wholeheartedly with the Fair Housing Act. Don't get me wrong there, but why shouldn't a seller have a choice on the scenario that their home is going to be turned into? For example, the neighborhood didn't have any rentals in it. Why all of a sudden was a rental going to be welcome into a neighborhood where everybody is a homeowner? I just thought that you should have that choice in when you're selling, that you sell to the scenario that you want to. And if you want to sell to a family that is, struggling a little bit, and this is going to help them get into a better position versus taking the highest and best offer, that's the seller's right. Why shouldn't that still be allowed? And I get the laws and the rules and how, we're going to get bashed for saying these type of things, but our beliefs are our beliefs, and you should be able to just sell to a scenario that you think is going to be best suited for your house, the neighborhood, and whatever else that is got going on. But, hey, we're all out there to make sure that everybody's happy, healthy, and loving it.
Becky, there's no doubt the highest offer isn't the best offer. We see that all the time.
No. Okay. So the highest offer sometimes, is the one that is not closing, right? So then that backup offer is the one that is being, reached back out. And that's the one that is, closing. So for example, I actually have a transaction working right now. They were not the highest and best. They were actually passed up on, but the original offer, they threw such a, I don't know, they shot for the moon. The house didn't praise. I'm not sure what happened, but either way, they had to bring a little bit more money to the table than and from what I was briefed on, it didn't, transpire. So now our buyers are now in the seat, and they weren't the highest and best, but it's about solid. Okay. So you can write on a pre-approval, you're pre-approved for $1 million. Okay. That's great. But if you don't want to have that kind of payment, and all of a sudden that reality of what you wanted to go for sets in, who cares? Who cares what's on that piece of paper, right? It's all about what is going to get to the closing table and how we can get you there as fast and efficiently as possible. And just because you wrote $20,000 over appraised value on a short appraisal doesn't mean that when you really have to write that $20,000 check, you really want to, right?
Yeah.
People were getting in that habit of just putting on the piece of paper because they were getting beat out so many times that they just wanted to hurry up and, do whatever they had to do out of desperation. And I feel like we're seeing a shift, like Jessica is saying, where you're not seeing these above and over, out of control over asking prices. You're seeing occupancy. You're seeing, I'm going to talk to your lender and I need to know that you're solid. It's a little bit more of the sellers got burned and the buyers have got smarter.
Yeah.
Just as you said that, I took one this week that I think is not going to appraise out, but that's okay. I already talked about it, and they said, we're buying it. We're in. Jess, you wanted to comment on what we were talking about there too.
Well, this whole conversation, it's residential real estate. This is a very people-y business. So yes, at the time you are making a huge financial decision and they have like 30 minutes to make that decision. So at the time, it's like, oh yeah, I'll throw $100,000 or $50,000 and I'll remove everything. And then they sleep on it and reality sets in. I agree with you, John. We should allow the seller to make those decisions. If the seller wants to read a personal letter, let the seller read the personal letter. I don't have my clients write their race, their ethnicity, none of that. I even tell them only supply a picture if you feel comfortable. We are in a very technology world. Anyone can figure out who you are and go to your social media. So what you want to put down in paper and what you want to communicate through this transaction to the seller is great. This isn't commercial real estate. It isn't just about the numbers. There are emotions involved. And this is a huge decision for buyers and sellers. So to take all of these facets away, I feel like us as professionals are doing a little bit of a level of disservice to our clients in that form and fashion.
We talked about it. Should the criteria be to sell a house that you've bought and sold your own home? Look, we're just assuming you already have the real estate license. Go and buy and sell your own home, and then you come and work with me. No problem. At least I know you've went through the experience. I don't care about the license. I care about the experience in the process. We'll find out what you care about when we come back at 248-539-9797. Keep it here.
Oh.
That's actually a decent segment and some more like personal level.
Yeah.
I think that went super fast too, that last
one time. And he.
Hi, Harry Glantz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show. 9:45. I already said it's a gorgeous day outside. Well, get out there and go buy yourself a house. First, call Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. You'll find our entire staff all weekend long, setting you up for home ownership success. Well, easy for me to say, 248-539-9797 in a Capital Mortgage, 1-800-LOW-RATE, the best mortgage banker. When you want to buy a house, we'll show you how to do it the right way. Off the air, we always talk about these great conversations that we have because it gets a little heated. And sure enough, a couple things that get me stirred up are these PIWs. Lise, they're great. And most of the clients out there on rate and term refinances are getting these PIW, property inspection waivers. Lise, tell us a little bit about the PIW, how they come about, and how fast we can close a refinance.
Yeah, PIW, property inspection waiver, means that we've ran the automated underwriting engine and an appraisal is not required. Doesn't mean that you can't get one. I have a couple borrowers that sometimes say, look, I've been in my house 20 years. I have no idea what it's worth. What if I get an appraisal? You can, but whatever that appraised value comes in, you are bound to it. You can't go back and say, oops, now I want to use my PIW. But especially if you have a lot of equity, for me, I'm seeing them mostly when people have obviously stronger credit profiles are always helpful, but more equity, the better. So if you're someone who's trying to do, like, I have a cash out PIW right now, but there's a 60% loan to value. Now, the minute I go over that, all of a sudden an appraisal is required. So, but it's a great way to take advantage of getting a lower rate, getting that refinance done, not having the expense of an appraisal, having to worry about the value of the appraisal. And yes, we can get them done quicker because we're not waiting for an appraiser to go out to the property and send back a report.
We will go to our caller this morning. Rodney, you're calling in and asking about pros and cons of a reverse mortgage. Well, Rodney, you can tell by those commercials. There's booklets and pamphlets and a lot to know about them. Give me your first question, Rodney. Tell me what you're thinking. Yes. Well, you can be able to do that. How old are you, sir? Yeah, you could. That's the youngest age you can do it at. And of course, then you could take up to 52% of the equity out of your house. So you could do that and not make the payment on it. So you're going to have to weigh out the pros and cons of it because there's other ways to release that equity too. Are you retired now, Rodney? Yeah, if you're retired and on a set income, the reverse mortgage could be a great tool for you. It's a great call. I haven't had a call on a reverse in a while. We're going to have our experts call you off the air. So I hope you left your number. Eric, you got the number there? Good. Rodney, we are going to set you up with our experts at Capital Mortgage and Fairway Independent Mortgage Corporation. We do a ton of reverse mortgages, and you'll definitely be a candidate to get that. And of course, reverse mortgage doesn't have a house payment. You just got to pay the tax and insurance. So thanks for the call. It's a great call. And anyone out there, if any family member out there that you might know, that's an interesting call. As Rodney mentioned, you guys are listening in. Of course, Becky, 100% equity in this case. He owns the house free and clear. You could either do a home equity loan, a small loan if you want to pay it back and you have the means. You could do a small mortgage, or you could do this reverse mortgage and pull the money out and not even have to pay it back.
Yeah, I mean, everyone's situation is different, and it's all about just starting that conversation, right? So you just open up the dialogue, sit down with professionals, and then figure out what is going to be the best way, because a reverse mortgage is going to affect your next of kin in a different way than a mortgage, like taking out a mortgage or an equity line and things like that. So really it's about looking at your whole profile, assessing what's going to be best for you. And then, we're going to kind of take it from there and then figure out what makes sense for you in your particular situation.
I brought it up a couple of times as a teaser in the rate, though. Shouldn't you really buy a house first? I mean, you really want to become a great real estate agent. You got your license. You went through, I don't know, the 3-month or 4-month or 1-week class and they jammed it. Now you got this license, but I've read the material. It really doesn't correlate like with everyday real estate, just like a lot of things don't in the real world. If you guys, I'll leave it up to the panel to comment on it. The real estate class, awesome, great stuff, a lot of law, a lot of things you got to know about how things work, but it really doesn't work with everyday real estate. You really got to learn how to buy and sell real estate.
I would say to Jessica, right now I would say and I think we talked about it. You guys are working. You may make it look luxurious, right? With accepted offer. Everyone's only seeing those high points, right? But I feel like real estate agents right now, you guys are working your butts off more so than you have ever had, ever.
Yes. The speed of everything, if you don't have the experience, you need to find a mentor or link up with someone who you can lean on, because the speed is going to show your lack of experience. where, being a homeowner, there may not be anyone on this panel that knows this, but when I started with Kevin 10 plus years ago, I didn't own my own home. I was a renter. There was a lot of things that I didn't know, but I hinged on his experience to understand the real life application of being an agent. Going through the process of buying and selling a home yourself, you then experience some of these aches and pains. So if you are really good at sales, but you are not really good at all the feels of being an agent, and then going through that buying and selling process yourself is certainly going to bring that level of expertise. This market is very, very fast. And yes, it can look luxurious on social media, but I have never worked more hours in a short period of time than since post-COVID. It's a lot of work. It's very fast. You have to be on your toes. You have to think outside of the box, and you need to have someone who has experience. So while you can think outside of the box, you have to make sure that some of the options that you're creating for your clients are actually sound. And leaning on you folks, leaning on you guys as experienced lenders, that's not a hat that I want to put on in this transaction. I need to stay focused and just buying and selling homes and negotiating for the best and right price for my clients.
John Kolb.
Yeah, I mean, it's you got to have patience, right, Jess? I mean, it's out there. You're just writing multiple offers. We're running numbers on every house under the sun, just to make sure people are educated before they get into the home and know what they have to bring to closing and everything like that. I mean, we talked about it on the podcast on Wednesday. Kevin Stewart joined us on the podcast on Wednesday and talked about, just how you have to make sure you're working with an educated, responsible team, basically, not just a person, a team, so that you are always being put, in the best light, in the best foot forward, so that you're not going to fall back.
Need somebody to lean on. I like it. There's a song or two out there that say that. Mortgage news lately, FHFA, the rate increase that was taken over earlier this year in January, they came out and said, wait a minute, Fannie Mae and Freddie Mac are holding too many of these second home, too many investment properties on their line. We're going to bump up the rates of the cost to get these. They've pulled back on that. So again, it's all of a sudden a little bit less expensive. Again, if you want to buy that second home, that vacation home, definitely call us at Capital Mortgage Funding, or that investment property. Still lots of opportunities out there in today's marketplace. We see these Airbnb things blowing up. And again, if you don't own a second home, a vacation home, find out how easy, 10% down, you can own a piece of a second home, which is fantastic. Also, rate and term refinancing. Yes, call Capital Mortgage Funding. You might want to drop the term on your mortgage straight up. Just you bought the house a year or two ago. So many of our clients are coming back to us right away. They're able to remove the PMI, that mortgage insurance, remove that, and then get a new term on their mortgage. So lots of great opportunities out there. And then one last thing I wanted to bring up is it's really been the cost. And the cost continues to go up. Lisa, if you want to jump in, anyone who's done some home improvements lately, definitely getting the permits pulled and the cost to get the workers out there, guys, that's really gone through the roof. Just comment a little bit about what your experiences have been trying to get some home improvement jobs done. It's
funny you say that, because this isn't necessarily home improvement, but I actually had a furniture delivery company do some serious damage to the entryway of my house. And it took me about 3 to 4 weeks just to find someone to come out and quote it, because everyone's so busy and it's not a huge job. It's a repair job on something. And I was thinking it might be $1,000, and it was $2,983 to repair damage they did by delivering furniture. So
Holy moly.
Exactly. So, I mean, it's crazy, because
were they like
skilled labor
ping pong up between you guys?
You have no idea. I'll have to tell you the story off air, but trying to find somebody to come out and, things that I would have thought would have been half the price, because it's their time, their effort, the cost of wood, their labor skills, materials in general are so much more expensive than they were. So doesn't mean that it's cost prohibitive, obviously, because people are still doing home improvements. I finished my basement last year myself, but talk to somebody, make sure. I had somebody say, I got all these quotes. They got their quotes last year, decided not to do the project, thought they were going to go forward this year, called me and said, how do I get more money out of my house? We didn't do it as an equity line, because they had all their numbers. And I said, well, it doesn't unfortunately work that way. We'd have to do yet another refinance if you needed another $20,000, because when they went to go move forward on the project, they said, hey, it's $20,000 more because of all the wood and cost and everything is increased since last year. So make sure you got all your numbers in line.
All right, listen, the highest rates in the last couple months are starting to hit us a little bit. We'll pay attention to the bond market, inflation. You guys got last words. Jump on in.
I want to touch on the second home element, right? So Michigan, like that's the one place where you can have that primary and that second home. It's beautiful. So if you're thinking about it, give us a call.
There you go. Buy that second home, buy your permanent house. Call Capital Mortgage Funding, 1-800 low rate, the best mortgage banker. We want to thank Jessica Zielke, Stewart Team Real Estate Partners in Rochester. Always great to have you, Jess. We'll see Kevin and you hopefully in the studio real soon. For John Kolb, Lisa Lawson, Becky Alley, I'm Harvey Free. Keep it here on 97.1 The Ticket. We are broadcasting live from the University of Michigan. We'll see you next Saturday.